Hi, everyone. Welcome to the SoFlo Real Estate Show. It is Mortgage Monday, and we're going to be talking about a great topic today. So I know you're all going to be very, very thrilled. My name is Athena Chilicas Barrocas. I'm not only the creator and the host of the show, but I'm a top producer and award winning realtor here in South Florida. Today, we're going to dive into the hot topic of pre approvals. And we're going to really talk about what are the different types of pre approvals and which pre-approval is really working best for today's hot market, super hyper competitive South Florida. So stay tuned for that. And before we get started, if you like what you're hearing, make sure you subscribe to this show, add your comments, or follow us. Love to have you aboard. So, Julie, welcome. Welcome to SoFlo Real Estate Show. I'm glad you're here. It's always good to have a friend and a colleague in the house. So, welcome.
Yes, always amazing to be there. We appreciate you having us.
Absolutely. Having an expert on home loans, especially on a Mortgage Monday with everything that's going on here in South Florida, I can't tell you how valuable it is. So I really appreciate you taking the time to come on out.
Absolutely.
So last week we talked about a really great topic. We talked about interest rates. And that was really appropriate because we're always hearing headlines and buyers are on the fence and they don't know whether or not they should come back in. So I think we really clarified, how interest rates are determined and what they can expect in the future. And basically it's kind of where it is what it is, correct?
Correct.
But so this week, what I really wanted to do is talk about pre approvals. It's the 20 years of being a realtor and in different markets. We have buyer markets, we have seller markets, and we have traditional markets. But the pre approvals, those are always so important. And buyers don't really understand that when they're talking to a lender, they're talking rates. And we did that last week. But what they really need to understand is what a lender can provide them to help them become more competitive, to win their offer, especially in South Florida where we have multiple offers all day long. So what
Absolutely.
I'd like to start off with from you is maybe you can tell us a little bit about what is a pre-approval, and we can kind of start from there.
So a pre-approval is something that you're going to want to bring into a multiple offer situation. A pre-approval essentially just gives the seller the confidence that you're actually going to be able to close when all is said and done. And so, when you come into, meeting with a client or meeting with a realtor, you want to make sure that you're definitely ready to go and ready for what's to come.
You said something very good that I picked up on being able to win the offer, right? I just had two listings that sold in 4 days. One was a condo in Miami. One was a beautiful little single family home up in Lake Worth. 4 days on the market, multiple offers, two different types of properties. And so you're right. You have to give the seller the confidence that you're going to be able to fund because at the end of the day, funding is really what
Huh,
counts, transferring the
exactly.
property, right?
Yes,
And that's what your
exactly.
game is all about is funding. So,
Exactly.
so I definitely get that. I'd like to talk about now, kind of switching it up, is the types of pre-approvals. And I would like to do it in an order of the least confidence maybe a seller could have or the least amount of verification a lender is providing in their type of pre-approval to kind of what the golden egg is of the pre-approvals. And so each one I'm going to give to you, Julie, are the ones that you gave me, but we're going to start at the very lowest and work our way up. And I'd like you to explain to our listeners and viewers, exactly what it is, how it's obtained, and where the benefit of that type of pre-approval would come into play in an offer process. Does that sound good?
Sounds perfect. Love these topics. It's my favorite.
I know. So let's start with what's called a pre-qual or a pre-qualification. Can you talk to about that particular one?
Absolutely. So pre-qualification is essentially what happens is someone will call me. They'll tell me, I have a family of four. I'm looking to buy, a $750,000 house, and I'm looking, I have a job. I've had a job for 5 years. I want to, I had a job for 5 years. I make about $250,000 a year, and I own my cars, and I have no debt really. So as a lender, I'm like, okay, this guy is great. He has an established job. He knows where he's going. He's moving up for his kids. It's a good price range. He has no debt, so he will be approved. So you are pre-qualified for your mortgage with that case. The issue with that is that maybe the business that he owns is self-employed business, and he writes off, which most people do, writes off $150,000 a year. Well, he has no debt, he has no car, but he also really doesn't have much money to work with as far as purchasing a home. So that's where it could be a little troublesome.
Okay, all right. So somebody's calling you, somebody you don't know, and
Yeah,
they're giving you very basic information, but you don't really understand what's behind that onion skin because you haven't had a chance to really verify any of their income, where it's coming from, any of the sources, what type of debt they have. It's just simply a conversation. Is that correct?
exactly.
Yeah.
Correct.
Okay. And so you issue, it's called a pre-qualification, and that buyer goes shopping for their dream home. And as a realtor, I have to tell you, as a realtor, I see the word pre-qualification. I'm like, I can't
Run.
take you shopping. Yeah, run. I can't take you shopping. This your
Exactly.
pre-qualification has no merit to it other than that brief conversation you had with the lender. So I'm always sending buyers right back to the lender, asking them to get something different, which we're going to talk about. So I really appreciate the fact that you explain what a pre-qual is, and maybe that's not the best pre-approval that you can have when you're going down in a multiple offer situation.
Correct.
Um, the next one, which is very popular, is called DU, which is desktop underwriting. And there's a lot of difference of opinions on what a desktop underwriting pre-approval is. So just in its plain basic form, what is a desktop underwriting pre-approval?
So a desktop, so people will argue back and forth that a desktop's the same as a pre-approval, but the issue with desktop is that when as a lender, I will take all your information that I've gotten from you so far, and I put it into a computer system. And now this computer system will allow me to pull credit. It'll allow me to do all I can look for, how long you've worked at a job. Like, it just gives you the option to do a lot of stuff. With a pre with a pre I'm sorry, with a DU, essentially I could in theory just go in and type whatever I wanted, and maybe I didn't actually put the taxes in yet. So a DU at the
Mm,
end will say, we need your taxes, but that doesn't necessarily mean that I've gotten the taxes and I realize that he only makes $50,000 yet. Because if I don't have it in hand, I could just put in whatever I want, and essentially, I mean, you wouldn't do that, because in the process of a pre-approval, you get all of your information together and put it in. So the DU kind of doesn't really it, you really want to kind of have insight on the budget and how attractive the buyer is. And with the DU, you don't always have to have all that information.
okay, all right. So you're really putting it in, and what is it coming back with the system? Kind of a pass fail,
Yeah, it
or what
essentially
is it
says pass
providing?
fail. It'll say pass fail, and then it'll give you a couple of different reasons that you can, kind of put it together, and what the reasonings are behind it. So it'll give you a pass or fail for sure. But when we move on to the next step, which is the pre-approval, you kind of you solidify all that info.
Right, right. So we have really so far two steps. One is the first phone call, and then you're taking the information from the phone call, and you can put it into your desktop underwriting system. But we
Correct.
want to go past that because so far as a realtor, I'm still not feeling all that comfortable in the competitive market. So let's go to our third choice, which is the pre approval. So tell us a little bit about what the pre approval looks like.
So a pre-approval is going to give you insight, on your budget. So we're going to sit down, we're going to talk about exactly how much it is that you're looking for. Purchasing a home is a major investment. And since the majority of homeowners aren't paying for it up front, it's just a good idea to know like what those budgetary limits are. It also makes you an attractive buyer. So with a pre-approval, you're indicating to the seller that you're serious. You've pulled your credit, you've gone to the bank, you've uploaded documents, you've gotten, your taxes and if there's any extensions or anything like that, I have all of that. It gives you room to negotiate. So with a pre-approval, you have some flexibility in your bargaining and your negotiations. So when a seller knows that a buyer is ready and qualified for the offer amount, the seller may be more likely to, compromise if they know that that purchase itself is a sure thing. It
Right.
also allows you to close faster. So when you close on the house, you want to make sure that you're organized and you're ready to go.
Has the buyer already started their application process at this point?
Yes, at this
They
point,
have.
they have. Yes, at this point, they fill out the application. You put all of the information in of what it is that you're looking for, and then that's when we can go over it together, line by line, debt by debt, asset by asset.
So, as a lender, where do you feel most comfortable? Are you most comfortable in the pre-approval process at this end?
At this point, the pre-approval process is the only way that I go.
Okay.
Because I need to see all that information. I need to know that you're not getting yourself into a bad situation, and I don't want to waste my seller's time. I don't want to waste the agent's time or the title company. So I really do everything up front to get all that taken care of right away.
No, I think that's great. And the one thing I have found over the years is during this pre approval time, maybe the buyer can't go out immediately to buy a home, but what they can do is maybe change their debt around, maybe pay down something. They can really, make a difference, what we call the debt to income ratio, which is the key, in order to do that. Do you have an example that you can share where you went through the pre approval, you were like, whoa, we got to
Yeah.
stop for a few months. So let's
Of
fix this
course.
up.
Yeah, exactly. So we do some fun things like what if simulators, like what if I pay down this credit card to this amount, it'll jump up. But one of the main things that really, really I feel is, relevant in where we are right now is I had a buyer come in and want to purchase a home, but she had $150,000 worth of student loans. Um,
Whoa, but
so
that's not
she
uncommon nowadays
it
either,
really
though, right?
it really, really isn't. And let's be
No.
honest, when COVID happened, what happened was the government put a stop on paying for it. So it's what it's called deferred. So the
Mm.
payments are deferred. So they're not making payments on it anyway. So like, this is a perfect opportunity for me to buy a house. And you're like, well, if you're deferred, what happens is Fannie or Freddie will charge a certain amount. So let's just, for easy numbers, they'll charge 1% of the total amount due as a monthly obligation for you.
Whoa. So if you
So
have
just imagine.
300,000, which some people do,
Yep, they do. That's a lot of money.
wow.
So what we were able to do is we kind of looked at all of that. I had her call, had her call the student loan company and just say, hey, listen, we're coming out of COVID. I can make payments, but unfortunately, I can't make a $3,000 payment. I can make $250 a month, and we can make this happen. And so that's what happened. They put her on a payment plan. She didn't get 250. She had to pay 350. That's a lot of debt. But what ends up happening is they set it up on a program that's affordable so that it doesn't mess with your debt to income ratios.
Okay. All right. So she was able to make that change on her
Yeah.
student loans, and then she was able to qualify for the loan.
Yes, correct. For the higher loan amount that she was looking for.
Well, that's a nice story. That is
Yeah.
a nice story. But had she gone with just the pre-qual, this would have come up somewhere in the process and it
So,
could have affected her ability to close,
yep.
correct?
This could have come up in some lenders. This comes up in the second, third week once the underwriter finally gets the
Mm.
documents and is reading it and is like, whoa, these student loans, you can't have zero payment on these student loans. You're going to have to put 1%. So now you're 3 weeks into it. You've already paid for the appraisal. You've already paid for the inspection. And now it's like, wow, this is crazy. So you definitely have to make sure that you're prepared for yourself and, obviously for the sellers and everyone else.
Yeah, no, I like that. And I think that's why it is so important that buyers not only look at the rate, but they put the rate aside and really start talking to the lender about how they can really put together a package so that way they can compete in this South Florida market. So
Correct.
let's take it one step further, which is I call the golden egg, and I have some examples as well. But I want to talk about what's called, we call it in the real estate world the underwriting pre-approval. So, can you tell us a little
Yes.
bit about that particular product?
Yeah, the underwritten pre-approval is going to always be your best option. We were in a great situation where we were very blessed with having everybody. We had so many underwriters during COVID because it got so crazy that we have the most amazing underwriters in all different states working remotely to help us with loans. And so once the business started to go down, we were like, well, we don't want to get rid of that. We don't want to like fire people. We want to make sure that we're, utilizing these amazing,
Yeah.
people that we have. So we came up with a credit commitment. And what that was is it really helps you submit the paperwork. It takes a couple days longer. So maybe it's 3 days instead of a normal traditional 24 hours, 48 hours. But I, as the underwriter, or I, as the loan officer, will go in and put all the information. I submit it to my underwriter. My underwriter looks at it, verifies everything, calls the business, make sure Bank of America's, everything's good and everything looks good. And then they issue a stamp called a credit commitment, which means that the only thing you need to close is title and your appraisal. And as long as those two things come out great, then you're good to go. So you can offer 21-day closings, you can offer 10-day commitments, you have all kinds of flexibility.
And that's really important. I want the buyers to hear that one more time. It's like having cash. So the only
Yes.
two things that you really need in order to fund or to close is what again, Julie?
So the fund and closes you the appraisal and your title. So the title work to make sure that the property is secure and good and that nobody, someone's cousin can't come back and say that it's theirs. And the appraisal, which is essentially the house. So we got to make sure that it doesn't need a new roof or it has poly pipes
You're just
or
kidding. We
anything
can
else
fix
like
all of
that.
that. We can fix all of that.
Yeah.
But yeah, I think, and that's so important when we talk about pre-approvals and looking for the right lender and making sure that the buyers have the right tools in order to buy. You go into an offer process, and I know you've seen this on the back end because you work with lots of realtors, and they go in and they have 6, 7 offers. It's not the 30 offers anymore, thank goodness, but
Yeah.
6, 7 offers per property, that's a lot of offers. And if
Yes.
everybody's coming through with a pre-call, a pre-approval, this, that, when you can say to a seller, look, this offer hasn't been underwritten, everything has been verified. This paper is like cash
Yeah.
and we can close. The buyer can close in 21 days. They just need these two items. This is all it's going to take. It does work because sellers
Yes.
don't want to go back on the market,
No, no. They
right?
don't
They
want
do
to go.
not want to go back on the market.
And you have to pay taxes for that month. You have to pay insurance for that month. So it's like the money just keeps adding up. And most people, get their house first so that they can get secure. So now they're
Right?
paying two mortgages and two taxes. And so people want to make sure, and especially in multiple offer situations, sometimes they'll take less money just to know that they can, that they're in a great situation.
It's true. It's true.
And then
And
you'll have some lenders that just go even that extra mile, which I don't know if you're talking about that. They go the extra mile where they, like we do a credit commitment, 100%, pre-approval promise. And what that means is that we allow, because of the fact that it's underwritten, nothing's going to go down, nothing's going to fail. That if for whatever reason it does, we will pay up to $10,000 to the seller. So not only are you going to are the seller going to be able to access like your deposit, like let's just say if they need, they'll also get $10,000 on top of that. And the buyer, you're going to get your inspection back, your appraisal back, all of that. We're going to pay that back to you because we don't want you to waste your time either. And we want this to close as much as you do. So it's really good.
yeah, And that's the name of the game. We wanted to close. And sellers are getting a lot smarter. I have to say, they're getting a lot smarter. I had a sale the other day, and we won the multiple offer here in Weston. And it was a beautiful lakefront home. My client's offer was not the highest,
Oh,
but they didn't need to be the highest because they had an underwritten pre-approval. And the seller was moving back to, well, they were moving out of state. They were moving to Seattle. They had already bought a home. So, you put these urgent matters or these criteria in place, and the last thing they want is to have a buyer come through and have the mortgage not work for whatever reason, right?
yeah.
And so to have that underwritten pre-approval was a great way of providing, clarity for the seller, comfort level for the buyer, and everybody was working toward the transaction. So it made a huge difference. It really does. I think in the 20 years, and how long have you been doing lending, Jolie?
Lending I've been doing for 6 years, but I've been in the real estate business for about 20.
That's true. You have. So we've been in it about the same time. I was thinking 20
Yeah,
years for lending, but you're right. You're right. But,
yeah.
even as we see things change, a buyer's market, traditional market, condos, single family, even luxury homes use a loan here and there, right? But at the end of the day, everybody wants to feel comfortable that the lender's going to write the check and the keys are going to transfer. And
Hmm.
so I don't think there's a better product out there than a pre approval, the underwritten pre
No,
approval. And it takes
the
how many
underwritten
more days?
pre-approval.
3, 5 days?
Yeah, two
That's not a
days,
lot of
2 days.
time.
Yeah, and if the
Yeah.
buyer is, if the buyer is very cooperative, it could be 48 hours, depending, and that's what's so great is that it's all done in house. Like a Bank of America can't do that because it's hard for them to do a credit commitment because they need to go through those proper channels because they get paid by the hour. So they get paid regardless. Whereas in another situation, when people do credit commitments, they really are invested in the property and their time.
Yeah, yeah. Every lender's different. That's why I like having different lenders on because everybody has their own processes. But you're right,
Yeah.
though. If you need a pre-approval underwritten, it's going to take a few extra days, but it's definitely doable. And in that process, you make sure as a buyer that you're actually qualifying and you don't have to do anything different in order to have that pre-approval. So you're strong and you're ready to go. So I think that is great. So let's talk about the what was I going to say? The time frame. So I just want to go back to the time frame. So for a prequel, we're talking about a conversation on the phone, and
Yeah, I could
then
hang up
for pre
and yeah.
and type the letter
Yeah, I could hang up
and
and write
send
type
it.
the letter. Yeah.
Oh my goodness! And the pre-approval, we're talking maybe 1 or 2 days,
One
and
or two
for an
days, yeah.
underwritten, we're talking about maybe
About
three, four,
it's
five
72
days,
hours. Yeah, yeah, they
72
say
hours.
72 hours.
I think it's great. I think it's
Yeah.
absolutely great. Now, you had also mentioned your own product, and I want you to give a little bit more time to that because you come on here and I like to have my guests have an opportunity to talk about what differentiates them in the marketplace. So, talk about one more time about your commitment letter.
Yeah, so just the commitment letter, it really just backs the loan 100%. So we give, we pretty much put our money where our mouth is. So meaning that if for whatever reason the loan doesn't close, that we will give up to $10,000 to the to the actual seller for not performing. And I would like to just point out that we've been doing that for a really long time and we've never paid that out. So
I was going to
meaning
ask
that
you,
we
how many
don't,
times has that been paid
yeah,
out? Zero?
yeah, meaning yeah, which means, I mean, we've been in the business for 26 years. So we were through it all. We've been through it all. So, we know that we don't like to waste time. We don't like to waste our time. And we want to make sure that you feel comfortable, that you're ready to go and that your offer's strong and that you're good to go.
I like it. I love that. So, just to recap for our audience, there's four different types of pre-approval, from the lease verification to the golden goose of pre-approvals or the golden egg, is that we have the pre-qualification, which was a phone call. We have the DU, which means the information's been inputted into a system with a pass fail. Then we move into the pre-approvals, where you have, as a buyer, you have the opportunity to review your financial status and situation with your lender or your loan officer. And then we have the underwritten pre-approval, which means everything has been verified and it's like going shopping with cash. So I hope all of this information was extremely valuable. And I hope that when you go out to a loan and you're talking to your loan officer and you're trying to figure out which loan officer to entrust your transaction with, is that you talk about these pre-approvals and find out which one they offer and whether or not it's good for your particular situation. So, Julie, thank you again for joining us. I love having you on our show. I truly do. And for you out there, if you found this information interesting, valuable, or you just want to learn more about the home purchase process, pre-approvals, interest rates, I hope you go ahead and subscribe or contact us directly. The information will be in the comment section below. So, Julie, again, thanks for coming by. I really appreciate it. Okay, everyone, have a great day. We'll see you next week, and we're going to be talking about credit worthiness. I hope to see you then. Bye.